In this video, you're going to learn about the biggest benefit to using a structured installment sale, which is lowering your capital gains tax when selling an appreciated asset. This method is pretty straightforward. The reason you can lower the total amount of tax owed is because the structured installment sale lets the seller of an asset to defer recognition of the sale through an annuity. The reason the annuity is so important is because the seller only pays tax on what they receive in that year. So if you can spread out the sale over a couple years, there's a good chance you can enter a lower tax bracket. Here's a simplified example to demonstrate this benefit. Our friend, Mr. Stickman, is finally selling his veterinarian practice so he can start enjoying retirement. He has a buyer willing to pay $1 million. Unfortunately, all $1 million will be classified as capital gains because Mr. Stickman started his business from scratch. This means he will be placed in the highest possible tax bracket and will be paying $300,000 in state and federal tax. Ouch. Now, suppose Mr. Stickman doesn't need the remaining $700,000 right now. In this scenario, at the time of purchase, the buyer will essentially buy an annuity from Mr. Stickman. The annuity's payout dates and amounts will be determined according to Mr. Stickman's preferences. He structures the annuity payments for 10 years. This means Mr. Stickman will receive $100,000 plus interest every year for 10 years. Each year, his tax obligation will amount to $10,000. Over a period of a decade, this totals $100,000. The structured installment sale clearly beats the $300,000 tax bill of the lump sum sale. If you'd like to learn more about structured installment sales, click here. If you're interested in a free consultation, click the link in the description to visit our site.